What's going on, guys? Foresight Capital here, and today we're going to talk about Palantir and how I would be trading the stock over the coming days and coming weeks. Yesterday, I made a video on Palantir discussing where I think the overall price target for the stock should be, and I think it should trade in the $50 to $55 per share range. And I came up with that based on the market cap of other peers within the industry and their current PE ratios, and where I think Palantir can currently get. But given that the stock is so recent to the public markets, there isn't a ton of available data on the stock, so a lot of the price action that we're currently seeing is solely based off of technicals, and that's what we're going to dive deep into today. All that I ask is that you give this video a thumbs up and consider subscribing if the video brings you value so that I can make more videos like this in the future. So yesterday, I actually highlighted some levels at which point I would be buying Palantir, and we haven't quite hit any of those levels yet, except for the kind of weak buy level. So I'll go back and discuss some of that. But as we can see, Palantir has been on an absolute tear, all the way from under $10 per share to over $33 per share in recent weeks, before pulling back to right around $27 per share where it's currently trading. For full disclosure, I actually own 100 shares of Palantir at $30.71, which I sold a covered call against to bring my effective cost basis down to about $28.16 per share. So currently I'm a bit down on this position, but I will be able to average down through either adding more shares or selling another covered call over the next couple of trading days. I do think, however, that Palantir is on a bit of a downtrend. So we had this absolutely insane run up and then a little bit of a pullback where we did some stair-step action down, and now we're trading at about $27. To me, this is a very bearish setup the way that it is. In fact, this is the first time that we've traded below the 50-day and the 9-period moving average at the same time after close of business. So the 9-period moving average is notated here with the yellow line. We've got the green line representing the 50-period moving average, and this slow moving red line representing the 200-day moving average. As we can see, all the way from the end of October throughout November, we traded above the 50 and the 9-period moving average and never really closed below that level. As we can see here, there was one day back in the middle of November where we closed below the 9-period and 50-period moving average, but we use this general uptrend line that we have here that'll make just a little bit thicker as support. So we've got really 3 levels of support, and currently we're trading below 2 of them, with the current price trading below the 9-period and the 50-period moving average. And the next level of support, at least of the 3 major supports that we've used on this big run up, is really all the way down at about $20 to $21 per share. So just given the way that this is currently set up, we've broken below this support line, which I noted was very weak, and that's why it's red. This was support on the downtrend from $33 per share down to about $28. It bounced, used it as support again, and then ultimately broke below that line today in Monday's trading action. The next real level of support that we had was the 50-period moving average, which we've actually broken and traded below and even closed below. So unless we have a lot of volume in the coming days, I foresee this stock trending down to the next level of support that we have, which is my yellow buy line here. Yellow meaning that I would start to consider averaging down at this point, but I'm still not a huge fan of buying. This line was actually support on the downtrend today that happened just after market open. We bounced back up to the 50-period moving average before the bears decided that we needed to close below that. This line was drawn because it was actually resistance on the big spike up that we had after using this downside support line, and ultimately the price consolidated between our green buy zone and our yellow buy zone for a bit of time. So 24.50 is the range that I would start to consider adding more to my position, either through more shares or by selling more covered calls, although at that point we wouldn't be owning any additional shares, we'd just be lowering the cost basis on the ones we have. The real buy zone and where I am personally looking to buy Palantir over the coming weeks is if we get a retracement down to the $22.50 per share range. And that was actually support that was created by these couple of candles here, which is realistically just a week in the past at about the 24th of November and the 25th of November. So we can see that it was used as support and resistance lines in between this yellow and green buy zone. And if you've watched any of my videos in the past, you'll know that I tend to be buying most heavily in the green buy zone. So my thought for the stock, just looking at the overall chart, is that we are in a downtrend. We've been stair-stepping down, big down day, consolidation, gap down, consolidation, and I foresee us trending down to the roughly 2450 range. If we break below that, the next level that we really have is this 2260 range, and then the only thing to catch the price from falling any further is this general uptrend that we've experienced from this first big green day after they went public, and we've used it as support just a couple times over the past couple of months before having this really big run up that we had over the past couple of weeks from mid-November through the end of November that kind of pushed the price to new highs. So that's kind of where I think I would be buying the stock overall, is in between this yellow and green buy zone. Ideally, if we see the price trend down to this yellow buy zone, consolidate, and then start trending back up, that will give us a good idea that the stock has stopped its reversal and is going to start a new uptrend. Conversely, if we see it break below and close below this yellow line, I could see a trend down to the 2250 buy zone, which is where I would personally start adding more to my position. Also of note, I want to talk about where I think the stock is going, and to do that, we're going to take a look at a little bit of a Fibonacci extension here. So we're going to take a look at where the most recent trend started, which I designate as the green buy zone, and then taking a look at its most recent highs, and we'll draw this Fibonacci chart. As we can see, this has created some support and resistance lines that Palantir has actually followed over the past couple of days. So we'll ultimately trade between some of these support and resistance lines, the 50 and 61.8% retracement line, and then we consolidated, and now we're trading between this 50 and 38.2% resistance lines. And as we can see, the consolidations happened almost perfectly on that consolidation line. So the next step down is this 23.6, which puts us very close to the $24.70 per share range. But what's interesting about the Fibonacci retracement is it also tells us where the price could go. And it does that through the next sequence in the Fibonacci pattern, which is 161.8%. And that would actually give us a price of $40.33. Which interestingly is pretty close to a big round number of $40 per share, where I think we could see future resistance. And if we take a look even further at the next step out in the Fibonacci sequence, the 261.8% retracement, which is basically 261.8% of this downside move that we charted out here, that's going to give us a price of about $51 per share. And I said that my price target for the stock, just based on some of the other players within the industry, is between $50 and $55 per share. So ultimately, if we see some re-rallying of this stock, and if it consolidates on one of these retracement lines or one of these buy zone lines that we've drawn here and starts to rally back, use these as levels of resistance somewhere around the $28 per share range, right at the $29.25, $31.12, and then of course all-time highs at $33.50. But then the stock could really pick up some legs and start running to that $40 or even $51 per share range, according to Fibonacci, which, if you've watched any of my videos on NEO, works out perfectly for some of these short-term trades. So overall, I think that the stock is going to continue a downtrend from where it currently is trading, and I would be looking to personally buy somewhere in the $24.50 down to $22 per share range. This is where I would really consider adding some more shares, but depending on the price action, I may nibble a little bit at $24.50 per share range. So again, green buy zones where I'm definitely buying, yellows where I'm considering buying, and the price target being all-time highs to take off just a portion of my profits and letting the rest run. As we saw, anywhere from $41 to $51 per share would be realistic based on the Fibonacci sequence, which is something that I love using in my trading, and it's proven to work very well over the years for me. And that would put me right in the middle of the price target that I came out with of about $50 to $55 per share. So just thought I would share kind of my thoughts on how I'll personally be trading, but of course, always do your research on where you feel comfortable owning the stock and never risk more than you can afford to lose. Always trade with money that you don't need to pay bills or make it to the next month. But I see some really exciting potential to possibly make 50 to 100% returns with Palantir, so it's something I'm definitely nibbling on. Don't forget to subscribe if the video brought you value. I'm going to follow up on Palantir in the future, and also leave a comment below on if you're buying more Palantir if it dips below $25 per share, or are you staying away? Thanks for stopping by, and catch you in the next one.